watched a lot of YouTube videos, read a lot of algo trading books, and basically try to get the best practices in. And then I started building a portfolio.
In this episode, I had the pleasure of speaking with Jacob Amaral. Jacob is the co-founder of WeTradeHQ, an online marketplace of day traders and investors. He also builds automated trading bots that invest his own money into the market automatically and for his clients. Jacob loves to automate everything and has found a passion for combining software and finance. He also has an awesome YouTube channel where he shows you how he automates these trading systems and he shares his progress. I'll have that link below. In this episode, we talk about how we got into algorithmic trading, his trading philosophy, and how machine learning could be used in this field.
Jake, thank you so much for coming in to the Ken's Nearest Neighbors podcast. You have such an interesting background,
Thank you.
Especially related to algorithmic trading. And that's something I don't have a ton of exposure to. And I think everyone listening will love to hear how you got interested in that. What are some of the intricacies around that profession, and what you've begun to build for yourself? I know that you've started a company in that space. So again, thank you for coming in, and let's maybe start by just hearing a little bit about your background, maybe how you first got interested in this specific domain.
Yeah, sure. No problem. I appreciate the opportunity. So let's go back here. I've always had an interest growing up with software, specifically gaming. I used to play a lot of video games as a kid, and I wanted to learn how they were built. I actually wanted to learn how to hack them because people were better than me, and I was like, damn. So anyways, had a big interest into that, and then went to college, got a job being a software developer for a couple companies here locally. And my boss at the time, I think it was my second job that I got, he was trading stocks. And at that time, I think Snapchat just IPO'd. They went public, right? And he's like, oh, I'm up 10% on the Snapchat stock. And I was like, oh, cool. So I opened up my own brokerage account and I started trading myself. I lost a lot of money. For the first 4 or 5 years, I lost money. Got into penny stocks and really bad stuff. I got lucky a couple times and made some of it back, but overall, I think I was down. Got into crypto as well, and I was down. So anyways, I'm doing that while still working. And then I met my current business partner, Brad. He had a YouTube channel at the time, and he at the time he was day trading, not for a living, because he did work for a asset management company, T. Rowe Price. I don't know if you heard of them, but he had a YouTube channel, and he was providing educational content when it came to trading. So I followed him, and I was like, oh, this is cool, and I joined his chat room and stuff like that. And then we got to know each other a little bit better, and we had another mutual friend that I eventually ended up flying down to the States to meet, and we were going to create a business together, basically, Facebook for trading. That didn't work out. That failed. But after that meeting, I was like, hey, Brad, why don't me and you just work, right? And I was like, I have a software background. I can build this kind of marketplace to start educating people on learning to trade and invest. And he had a lot of friends because he's a YouTuber. He had some of influencer friends, I guess. So he was able to bring a bunch of people, and we created a community with that where you can actually learn how to trade and get mentored by traders that have had success in the past. So I built that, and that's what our company WeTradeHQ is. But in doing that, I was like, okay, I was still trading at the time, and I lost a lot of money. I think I stopped trading myself. And then my brokerage at the time, which is Interactive Brokers, which is what I still use today, I noticed they had an API, and I was like, really? They have an API? Obviously, I knew what that word was, and being in the software space. So I looked into it, and I was like, holy crap, I can get stock market data and place trades automatically. Why am I not doing this? Why am I still using, basically discretionary trading myself? So I was like, oh my God, this is awesome. And then a friend of mine who was also a mentor on our platform was like, hey, check out these other brokerages where basically they allow you to build algorithms faster than doing it yourself. So I was like, really cool. And then I started building, how I started off was I started building, the friend that introduced me to that brokerage, he wanted me to build him a trading system, an automated investing system. So I actually built his system first. And from doing that, I learned how it worked. I learned how the API worked, how to get stock market data, how to place trades. And then I started building my own system. And I was like, all right, watched a lot of YouTube videos, read a lot of algo trading books, and basically try to get the best practices in. And then I started building a portfolio. I started building trading systems that traded different markets, that traded different time frames, which I still do today with my own capital. And I still build other trading systems for other people. But that's kind of how I got started. It took me a long time to learn that algo trading was actually a thing. Like I said, I started trading 5 or 6 years ago. And not only recently, maybe 2 years ago, I started algo trading. So it's funny how it took me such a long time to learn about it, even though I was a software developer the whole time and I was in it and in the industry. It was funny. So, but yeah, now I trade my own capital. I have my own portfolio of different trading systems, and then I also build other trading systems for other people, and potentially soon partner with some funds to build systems for them as well. So super exciting stuff.
That's awesome. Well, I love that this ties really well into your interest as a kid. You were talking about playing video games, figuring out ways to hack them. Yeah. What is hacking in a video game? It's taking some of the human element out, right?
Yes, it is.
And what you're doing now, when you're using algorithms to trade, you're doing just that. You're taking some of the human biases out. You're taking out some of that from making money in the stock market or in whatever market you're trading in. I think something that would be pretty useful for anyone listening would be just a better understanding of how you define trading. I know that there's different types of trading. You can trade options, you can trade commodities, you can trade on the general market. Do you think you could just define kind of what the scope of those things are and talk about what you maybe focus in more?
Yeah, sure. So when I say the word trading, basically you're buying an asset. That asset could be stocks, could be options, futures, Forex. Also, real estate is an asset, anything you can actually buy for a market price. So when you're trading, you're buying that, right? And eventually selling it, hopefully in the future for a higher price to make a profit. Okay. Trading and investing are, I would say, synonymous, but usually when someone says trading, they're selling on a shorter time frame. So they're selling tomorrow or this current day, they're buying in the morning, selling at night kind of thing. Or investing, generally that term is more like you're buying an asset and you're holding on it for months or years to hopefully get a bigger profit. And I guess some other terms too, when it comes to, I guess, algo trading, because there's trading, right, which you can do manually with a brokerage, and a brokerage is a company that facilitates these trades on the stock market. The stock market is where companies can sell ownership of their company of their company. And when you buy a stock with a brokerage, it's, like I said, facilitating that trade. But then you can also algorithmically trade, where you have rules of when to buy and sell, right? And those rules are usually programmed by you or a company you're hiring, I guess. And those rules could be anything. Could be as simple as buy when the market opens and sell when the market closes, or some really complicated neural network where, I don't even know, I'm not too well versed in that stuff, but it can be very complicated if you want it to be. And a lot of the, top hedge funds probably have a mix of both, of really complicated strategies, but also really simple ones to kind of diversify their investments and reduce their risk.
Well, so that's something I hear a lot about when you talk about finance, is diversifying your portfolio and reducing risk. Those are pretty important things. I think there's also, if we're talking purely about any type of market, the more risk you have, the higher potential for return as well. How do you balance those things when you're working with algorithms? Do you have some algorithms that are more risky? Do you have some that are more conservative? Do you have a bunch for different types of market scenarios? I mean, for example, we have an election coming up. Like, do you have to make special tweaks? Do you have, safety nets, whatever that looks like?
Yeah. So everyone has their own strategy of in terms of diversifying their risk. How I do things is basically, right now I'm trading, or my portfolio consists of the same position sizing for each, meaning when I'm going to place that trade, generally there's a quantity associated with it, right? You can buy 5 shares, 100 shares, 1,000 shares. Each of my strategies trades the same quantity sizing. So with that being said, the risk you could say that, okay, it's somewhat equal because you're not heavier into something else than another asset. They're all equal right now. What I do to tweak things is if a strategy is not working, AKA I'm losing money, which actually happened very recently, I will turn off that portfolio. I will turn it off for a set period of time, and let my other ones run to hopefully, make some type of profit to offset that loss, and then turn it back on again. So that's my main tweak. And also I create new strategies. I have a billion ideas for strategies. I have a Trello board of like at least over 100 right now for ideas of strategies. I can't get to all of them physically yet, but slowly and slowly, I think of new strategies that trade different assets. So for example, I trade gold. I trade the S&P, which is the top 500 stocks. I trade the volatility index, which the more volatile the market, the more the prices move, that price goes up, and then vice versa. But I have all these other strategies for other things. I have strategies for stocks like Apple and Tesla. So adding those new strategies in would help offset that risk, because hopefully, ideally, you're trading something that's uncorrelated, where the price is uncorrelated to what your other portfolio is. That way, if one's a loser, hopefully the winner can beat that. And it's really tough it's impossible to, going forward, when you put a strategy live, it's impossible to see how well the performance will do without, like, you just have to put your real money in it and hope for the best kind of thing. Obviously, you can do stuff like back testing where you try it against history and you get some type of indicator how well it's doing. But the moment you put it into real time, it's all out of sample, and you just have to see if it does well. Now, in your question in regards to the election, what I said earlier was turning one of my portfolios off, just because there's so much volatility, that portfolio, when it's volatile, it doesn't do well. And, I have set parameters where if it loses X amount of days, or if I'm down X% on that portfolio, I just turn it off. So I think with this election going right now, strategies that use volatility are going to do pretty well, because there's a lot of uncertainty of who's going to win and how that affects the economy.
Very cool. Well, so it sounds like in some ways you can actually diversify by trading more, right? Like turning on different algorithms, whatever that might be, which I think is a fascinating concept. Like most people say, it's less risky to do less trades. But, if you're doing more diverse trades with with a larger amount of capital, in theory, if they're not correlated, it could be even safer than just holding or being invested in a couple of things. One thing that I've seen that I think is pretty interesting, and it's something I never understood why people didn't do before, but there are a couple trading platforms that are now selling you shares of stocks. So for example, with Bitcoin, I can buy 1/10 of a Bitcoin, or I can, in theory, buy $100 worth of Tesla rather than buying one share of Tesla. Do you think that that'll have a positive outcome on the algorithms you create, because that gives you so much more control of the amount of risk you have? Or is that just something that probably overcomplicates the process, because these companies that are selling shares of shares have to be taking a cut somewhere?
Yeah, so I think it's dumb. I don't know why they're doing this whole fractional shares thing. The thing is with so off the bat, a lot of companies will do what's called a stock split, where they'll just issue more stock so the price of that goes down. But the reason why these brokers are doing these fractional shares is they want more commissions, right? Every time you place a trade, right, usually you have to pay some type of commission. Now, there's stuff like Robinhood and Webull that have no commission, and instead they're selling your buy data, your data when you make a transaction, to hedge funds, so they can trade against you or use that to influence their trades. I think it's great for the brokerages because they're getting more transactions in, right? But in terms of my trading systems, overall, I think it won't affect the economy too much, because or the markets too much, or the algorithms too much, because people that are using those fractional shares are generally don't have a lot of capital, and thus, if you're only trading with $2,000 or $1,000, your trades aren't really going to affect the market. You got to be putting in millions or billions into a trade to really affect the price. So I think those fractional shares won't really affect the market too much. It can complicate the process. And I've been asked to build some trading systems for fractional shares. And I just say no, because I don't want to deal with extended scope, or I just think there's going to be more problems with it from a technical perspective, and just something I don't want to get into. So, myself, obviously I'm trading, generally per trade, $5,000 to $10,000. So I don't really see value in this for me personally, but I guess if you have a low amount of capital, it can help that. And with cryptocurrencies too, right? How much is one Bitcoin right now? Like 13K. Like obviously that makes sense to buy portions of that. And there's a lot of rules with crypto. I've used the Binance API. I do have a crypto bot, and I've built some systems for other people, but they have a lot of rules when it comes to how small, like the minimum size of the quantity. And it's actually really frustrating building systems for cryptocurrencies, because there's so many rules. Like, Bitcoin has different rules from Litecoin and that sort of thing. But I always found that interesting on how that worked.
Interesting. That's pretty fascinating. I mean, there is such intricacy between all of these, either the systems that you're using or the whatever you're trading. I'd like to touch on some of the crypto stuff in a second, but first I'm interested in what tools you're using to build a lot of these things. So if I recall, I would imagine you're using Python for a reasonable amount of stuff. But are there specific packages, modules, whatever that might be, that would make this more accessible to someone who's just starting out?
Yeah. So, yep, I code most of my systems in Python, although I am switching over to Node.js. We're building a lot of, we're starting to transition our bots onto the web for our clients and customers, where they can just log into a website. But yes, Python, a lot of the libraries that you're going to use is probably the most popular one is with the brokerages. So if you want to make, say you have a brokerage with the biggest one in the West right now is TD Ameritrade. You want to use, they have their own API. So TDA-API, I believe it's called. I'm going to use a lot of technical analysis. So like indicators and stuff like that. So I use TA, package technical analysis, which has a lot of built-in functions to calculate like, RSI, moving average, all that sort of stuff. It's really helpful instead of, coding that for yourself. And then I use obviously pandas, which is what the most popular package in Python for a lot of the technical analysis requires a panda series. So you kind of you're forced to use that with the other packages. And then, yeah, with Python, and then I'm not too well versed in like using Python applications on the web. So what I'll do is I'll use the PyInstaller package to export my code to an executable that can run on Windows, or you can do Mac as well. And then I'll usually run that on an AWS cloud server for my clients, so they don't have to, running on your local computer or desktop. If your power goes out, internet goes out, your bot's toast. So you got to have it on a cloud computer. But like I said, I am transitioning a lot of my systems to Node.js because we're releasing a web dashboard where people can log in and run a bot, and I'll have to set up AWS or a cloud computer. Just runs all on our web platform. And a lot of that is just, HTTP requests to brokers' APIs. And there's a couple Node.js packages for technical analysis and stuff like that. But yeah, that's pretty much what I do. Yeah.
Very cool. I mean, again, a lot of those are a pretty clean crossover to data science. Sorry, I have something in my throat today, I guess. But yeah, I mean, pandas is probably the most popular package for data science as well, just dealing with data manipulation. And it seems obviously there's, again, a lot of intricacy, but if someone is looking for a fun project, the stock data, the tools are out there to make this relatively accessible. And I think that's very, very exciting. So let's first touch on one last thing. You've kind of talked around it a little bit, and I want to get an idea about your specific trading philosophy. I think that's always something that's fun and interesting. What drives all of the algorithms that you create? Is it just curiosity? It's that, hey, if I build enough cool things, I can try them out and then I can scale back to whatever's working best? Or does it go beyond that into something that I probably wouldn't understand.
No, I think it's pretty simple. So at the end of the day, I'm trying to put my money to work. Having your money sitting in your checking account, you're losing money because of inflation, right? Every year, government's printing more. So why not put
Especially
that to
now, yeah.
work? Yeah, a ton. So why not like put that to work? So that's what I've always thought. How can I put my money to work in a way that obviously I can never say, okay, I'll never lose, I'll always win. But how can I my philosophy is generally how can I put it to work that it can make more money than definitely inflation and obviously beat the market. That's what I'm looking to do. So with each of my strategies, I usually trade high leveraged assets. So right now I'm trading futures, and futures are a leveraged asset, meaning that you don't have to meaning you can make more money than what you put in and lose more money than what you put in, right? With a stock, for example, say you have, I don't know, Apple, say it's at $100 a share. If you put in $100 and it goes to zero for whatever reason, the max you can lose is $100, right? So with futures, you can lose more than what you put in because it's leveraged. You're putting some capital and then your broker is matching the rest. So that means the profits can be more, but the losses can be or potentially more than what you put in your principal. So I like trading these high leverage assets because my returns can be, it's at increased risk, right? But I can also make more returns. But I trade such a small quantity that I feel like I'm putting my money to work in the most optimized way because my quantity is so small, my risk is definitely defined. I know how much I could potentially lose. Obviously, I have like a stop loss as well, where it just cuts out. But because I'm trading that high leveraged asset, my returns can definitely be quite bigger than if I trade something like stocks where it's not leveraged. So with each new strategy, generally, that's kind of my philosophy going forward. In terms of the technical side of things, what I look for, I don't usually use any type of indicators. Generally, I just like to look at, I like to grind numbers and I prefer simple strategies because I'm a one-man show. I don't really have time to spend months or years on one really complicated strategy. I rather just have simple strategies that, for example, one of my strategies buys after X amount of minutes and sells the next day after X amount of minutes. And it's been, profitable so far. So I prefer those simple strategies and, just being able to look at each one and understand the strategy. I never want to come to a point where I can't even explain what I'm doing because it's so complicated. And I think a lot of people do that. I'm sure in some hedge funds, one person can't explain it. They have to get like multiple people to explain one strategy. So I want to make sure that, I always have that in mind that, I can tell someone how it works if I needed to, which, I generally don't, but, that's the kind of the point of it.
Well, there's this concept of Occam's razor. I imagine it's pretty common in data science, and I think in some software engineering, but it's that the simplest solution or the simplest approach that produces around the same results is what you should almost always go with.
Exactly.
I think we hear the horror story of, I forget, it was the flash crash, maybe it's like 5 years ago or something.
Yep, 2011, I think it was.
Okay, well, I'm getting old, I guess. But where these systems break down, and I'm interested in how do you do QA to make sure that none of these kind of run away and bankrupt you? What does that process look like? Is it a lot of back testing? How are you kind of sure about these things? So that would terrify me. I know that I have fat fingers and I'll probably mess something up somewhere. But do you have systems in place? What do those look like?
Yeah. So generally my process, how I start to ensure that my strategy is not going to break, and they still do, there's still bugs with them. But the best way to do it is number one, back test, where you build the logic for your strategy, and then you test it out in history, and you check each of the trades. You make sure that the quantities are correct and the entries and exits are correct in terms of pricing. Generally, the next step is I run it with a simulated account, and I'm actually building my own simulation system where I can simulate the market data, but not put my own capital in. And that way, that's way more accurate than back testing. And it's, forward in terms of out of sample data. And I can see how it reacts to the market. And that way, usually I run that for a month where it's running in a simulated account, and I can, check bugs right off the bat. Obviously I do, stuff like error checking and usually a log file where if I can't view the trades for the day for whatever reason, say I'm out, I can read that log file. but generally that simulated testing for that month gives me a good indicator. And if I'm not confident, like I have a confidence level, right? And the confidence level needs to be over a certain amount for me to put it with real money, or else it's a waste, right? So you generally, that's a gut feeling for me over a month. If there's too many issues, I won't run it. I'll try it again for another month. And then obviously with my real time trading systems, I'm watching them every day to make sure there's no issues, and I kind of know what to look for. I would like to build my own custom system where it kind of detects those anomalies where it's saying, oh, the quantity is too high or it's too low, or it didn't sell. But I've added enough error checking to handle that sort of stuff that it's pretty solid. There is some stuff that slips through the cracks. The biggest issue is connection issues. If the API connection server goes down, or I've had some issues where my AWS cloud servers lose internet connection randomly. I don't know why I'm paying them, but handling those is a big issue. And that just came with experience. My first couple bots had those issues. They've been fixed, and going forward, it's not really an issue anymore. But that's kind of my process.
Very cool. Now let's touch on crypto real quick. It kind of goes in and out of vogue. Right now, it's really hot again. You have Bitcoin getting to some levels that they haven't been in, well, a year or two.
Yeah.
And huge volatility asset, right? Is that something that, especially in my mind, as the economy perhaps worsens or the US dollar potentially weakens from pumping a lot of money in, is that something that is exciting to you? Is that something that's an unknown and probably only worth a small portion of risk? What is your general sentiment on that? And you had mentioned you do have a crypto bot, but I'd love to learn more about a little bit more of your philosophy related to the cryptocurrencies and altcoins and stuff.
Yeah. So with crypto, right now I don't have any trading systems that run it live with real money. As a diversification, I think it's a great asset to potentially look into and add to my portfolio. I've always had, I never really fully understood crypto. I never delved into it and researched and read. So I always felt like, does this really solve a problem in my life? I don't really use it, but at the same time, my trading systems, trade stuff that I don't use, like gold and stuff like that. So I think overall, in terms of finance, it's a great asset to have to hedge with your other positions. In terms of the technical side of things, like actually building trading systems for cryptocurrencies, it's definitely a little bit more difficult, I find. There's just a lot more rules. Like I said, when it comes to quantity sizing, say you want to buy 0.001 of Bitcoin, there's a certain level that, you can't buy under, or meaning like it's too small. But then also the minimum size amount for it to move. So say you're buying like 0.01 crypto or Bitcoin. Bitcoin needs to move a certain amount, at least on Binance. This is Binance, which is the biggest right now, I think the biggest exchange for crypto. I don't know about Coinbase or other large ones, but at least in Binance, it has all these rules for it has to move by X amount before you can sell it. And if you try and sell it at too small of a quantity, like you get an error message and stuff like that. So I always have technical issues with that. At least building it, I got over them, but I found that there was a lot of, with their APIs, they're really strict, and I didn't pursue it further just because with my systems currently right now, they're profitable. I want to make sure they're running and make sure the gears are oiled and everything's working fine before I move into crypto. But crypto would be like my last diversification in my portfolio, just because I want to try so many other markets that my broker currently offers, because cryptocurrency is always on a different broker, right? If you're trading stocks or options, futures, it's generally with a broker that's certified with the SEC and stuff like that. Where crypto, it's a whole different ball game. Their APIs are different. Wild West, yeah, and their APIs are different. So there's a lot more technical debt with crypto. At least if you started with crypto from the beginning, absolutely, for sure. But I didn't. So switching over to that, there's a lot more work. So I want to kind of squeeze as much juice as possible from, classical markets before I move into that. So yeah.
So you mentioned that you're trying to keep the gears oiled with the current algorithms that you have. How much of a time commitment is that after you built something to maintain it? And about how many things do you generally have going at the same time?
Yeah. So right now I have 3 bots with real money going at the same time. And then I have probably about 5 that are running in a simulated environment. I'm just evaluating its performance. On a day-to-day basis, I probably spend about 2 hours just monitoring it and making sure everything's running fine. If everything's running fine, probably less than 15 minutes because I'm just like opening up my cloud computer, looking at it. Okay, minimize, work on other stuff. But if something goes wrong, right, or if buys or it sells at the wrong time, it could be 5 to 6 hours in debugging that issue. At least when I first started. Now things are pretty smooth. I built systems, I built QA that kind of handle a lot of those errors. But when I first started, it was quite a bit of time. The most time is spent building the strategy, of course, thinking of the idea, and then building processes to automate that as much as possible. So right now I'm working on my own like trading user interface that connects directly with a brokerage. Whereas, I'm developing one that connects directly with the brokerage. But what I'm running with a live account right now, it's a third-party software that allows you to quickly churn out strategies and connect with a brokerage, but there's a lot less customization. So I can build strategies really quick with this third-party platform, but in terms of stuff that can be customized, you're limited, right? And that's with everything. Anytime you use a third party and not build it yourself, you can churn out stuff faster, but you're limited to customization, where I want to start working on customization more in terms of optimizing my strategy. So I'm building my own user interface, and that's taken me, at least 4 to 5 hours per day over the last 2 months building that. It's almost done, but it's going to be worth it. So yeah, in terms of monitoring my strategies right now, it's like less than an hour or 2 hours a day.
That's awesome. So it sounds like as you get some more momentum, it becomes easier and easier, which I think is something we all want, right? Whether it's making YouTube videos and each one hopefully becomes easier, or doing interviews, whatever that might be, you start to get a little bit of, I guess it's scale associated with it. Mm-hmm. And so let's shift gears a little bit. Is this all being done through WeTradeHQ, or is that kind of a separate business? What are all of the components of the things you're involved in? So you trade for yourself. You also build algorithms for other people, and then WeTrade is also there. I'd love to dive into. We've covered the first bucket pretty heavily, I think, but maybe some of those other buckets I think would be really incredible for people to understand.
Yeah. So initially I started WeTradeHQ, and that started off as an online education marketplace when it came to day trading, investing in the stock market. So there was no algorithms on it. It was just people trading. You can learn from a mentor. You could subscribe to a mentor or a course and learn about a specific field when it came to trading and investing. Then, so I built that whole marketplace, and then now we're shifting towards the algorithm side of things. And I kind of started my own, I would say, mentorship where I build custom trading systems for people. And then I also have clients outside of WeTradeHQ that have contacted me directly they found usually my videos on YouTube, which is cool to hear. So usually I work with them just one-on-one, where with WeTradeHQ is more of like a group setting, where I build custom trading systems for people and software in general. Some people are just looking for data scrapers or, getting some type of stock market data that you can't traditionally get through an API. So I do that as well. And then I have my own portfolio trading system, trading my own capital outside of WeTradeHQ. This is just on my own. And I actually post like how much I'm making on my YouTube channel as well. So I'm really transparent with it. And eventually with that, I want to one day create, some type of fund that can bring in outside investors. But right now I'm just trying to prove my track record. So I do that. I got WeTradeHQ, which is more education. And then I also build trading systems for clients, both on WeTradeHQ as part of my mentorship, where I also teach people how to build trading systems. And then I have some clients that have contacted me one-on-one through email that, I just work with them exclusively for their own proprietary systems.
Very cool. If you ever want some seed money, I think I have a couple bucks I'd be interested in exploring with you there. So
awesome. We'll keep in touch.
Looking forward to what the future holds related to that. There's 2 other areas that I'm very interested in. The first is I follow a lot of the what are they called on YouTube? Basically the Guru Busters. And
Yes. I love them.
there's a lot in kind of both of our spaces. So in software engineering, data science, in especially in day trading. You know,
Mhm.
how do you feel about those things? Obviously, they don't make anyone that provides content around trading look good. I mean, obviously, it seems like you're like, hey, there's a good chance you lose money. Like this is a slow and steady game, not a race to the finish. But
Yep.
what can you do to combat that message? What can you do to you know make it clear to everyone that like the truths about what trading actually is?
Yeah. So by the way, I love those channels. I watch them all the time. Specifically CoffeeZilla. He's great.
Yeah.
And he just totally busts everyone. It's absolutely hilarious. And I'm telling you, I watch him the most right now. Yeah. So overall, I think these gurus and technically we trade HQ. I guess we have gurus because people teach, right, and everyone associates a guru with someone teaching. Um, and that's why I like to build stuff for people instead of teach people because it's just more rewarding. And at the end of the day, the client or customer is getting something of value they can use going forward forever that hopefully either saves time for them or solves a problem. But what I say is, each of these people, these gurus that are selling some type of course or chat room or mentorship, whatever it may be, um, there is some value in that, right? It's education. Yes, could you find that for free on YouTube? Absolutely, but most cases it's not organized. Well, I mean, I guess there's YouTube playlists, but generally it's an organized format, so you're going to get value for it. What I don't like is, especially when it comes to trading, is people lying about their results. That's definitely illegal, and a lot of people do that, and you don't realize it. That when someone says what they're making, and then you ask them for a broker statement, they won't send it to you. So I think that's not cool with trading and investing. And anyone that has some type of results that seem too good to be true, ask them for a broker statement and see if they send it to you, because they probably won't. They're probably lying. So I think if you're searching YouTube or Google and you're looking to learn something, whether it's trading or data science, definitely do your research about the individual and see if they're transparent. And generally, if you don't like it, you can just ask for a refund and go about your day. But there's definitely been like courses I took in college and high school that I'm like, this isn't worth my time, or I didn't get any value out of this, but I still paid for it. I guess not high school, but in college, I paid for it. At the end of the day, just do your research. And generally there is some type of value in those courses and mentorships. But if you want to do incredibly well in the stock market, you're not going to do well with yourself. You're going to have to raise a ton of money and partner with incredibly smart people and be incredibly smart and really put in 10 to 15 years of work to see any type of good returns. If you're coming in with $2,000 expecting to make 2 million in a year, it's just not happening. If you can do 10% a year, you're good. Like you're pretty good. If you do 15, 20%, you're a god, right? So don't expect amazing returns from anyone or from yourself. You simply just have to love the process. And like I said, if you want to make really good money, you need to raise money and really build a team and have incredible people working with you to build many trading systems over large amounts of markets. You're not going to make much money with anything like less than 100K. So, like I said, great people can return 20 to 15% per year. Just starting out, like the first 5 years, I lost money. And only recently have I started making some. I don't think I even made enough to overcome those losses yet, but I'm getting better and automating those processes in the hope that in the future, if I can have a track record, I can start, getting outside investors and that's when you make decent money.
Yeah, I think it's important to note that these things are a volume game, right? It's not necessarily, uh, I mean, you can get really lucky, and I'm sure we're both familiar with Wall Street bets, but you see that almost everyone who makes a ton of money also eventually loses it all. And so I love this book. I forget the guy's name. It's called Fooled by Randomness. And the idea is that, if there's 100 traders and they traded completely randomly, at least one or two of those people would be insanely profitable. But that's only due to luck alone. And so I think it's really important to consider, okay, if I want to be profitable over the long term, I have to make choices that are optimal. I have to not go broke. And I have to make good decisions along the way uh, that are calculated rather than just kind of risking it all every time. I mean, there's always going to be that one person that is successful doing that, but the odds are it's probably not going to be you, right?
Yeah. And that's all you hear is the what's called survivorship bias, where someone that makes it really well, that's all you hear about, right? You look at people like Elon Musk, where he's talked about all the time now, and he made all these great companies, but like he's a 1 in a million type of guy, and he put in a lot of work to get there, and probably some luck as well. So when it comes to trading, with Wall Street bets, like you see these guys that make uh, insane amounts of money with trading options. A, they could be lying, right? You can take a screenshot and modify it. But B, they probably open themselves up to an exorbitant amount of risk where they risked all their life savings, right, to make a 2 or 3 times return one time. If they did that again, they'd probably lose their house, right? So if you want to be consistently profitable, I mean, it takes a lot of work, a lot of time testing strategies, and hopefully the market's in your favor. At the end of the day, is stock market gambling? Somewhat. I mean, I guess I don't know the definition of gambling, but you can have a risk associated to each trade and investment, where if you go to a casino with a slot machine, I don't know if you can see the risk, but you can basically control your risk with the stock market, but it's pretty random, and you just have to hope that the chances with each new strategy that you're running in the current market cycle is in your favor, and that you adapt over time, or your trading systems adapt over time in that favor. If that makes sense. Kind of went on a rant.
I think that no, that was incredibly useful. To get to what the difference between gambling and not gambling generally is, I think in most cases, gambling is that there's a closed circuit and more people lose than they win. So, for example, in let's take sports betting, where someone's betting on one team, other people are betting on the other team, and at the end of the day, there's always going to be losers. I think technically in the stock market, everyone can win sometimes, right? If the S&P continues to go up on an annual basis, if everyone is just invested in the index, everyone can kind of win. Obviously, there's a huge risk component, but I think that might be what there's a subtle differentiator for. On the flip side of that, if you're trading futures, if you're taking some of those very risky things, I think in a one-off, like everyone, somebody loses in those scenarios either way. So maybe not the best definition, but I have to deal quite a bit with, what gambling is, what it isn't. Is it a game of skill? Is it a game of chance? And those are big determinants in the sports world, which is, I guess, kind of
fun.
Yeah. So just one kind of last word of advice related to the information that's out there. So you recommend checking the brokerage, what are they called? The brokerage slips for
brokerage statements.
Brokerage statements. Are there any other just things to vet people to make sure the information is legitimate that you'd recommend?
I would look at, just look at I guess if they're a guru, generally they have some social media. Look at their comments. Look at any reviews, I guess, for the course, especially if they're unbiased. Like, I guess Google reviews or Yelp, they probably don't have that, but Yelp's usually for restaurants. But some type of unbiased reviews, because sometimes they have their own website and they can just filter out those reviews. But yeah, I would look at those. Just look at what other people are saying and kind of vet them. And generally, you can tell from their. Generally, you can tell by watching their videos if they seem too good to be true. If they're showing all these flashy things, it generally is. And yeah, that's kind of what I would do. Definitely be cautionary. And I'm sure there's some great people out there that have a lot of great content that you can learn from. And it doesn't matter their personality or how they present themselves, but if the content's good and you're learning from it and you're able to, take that and make your life better somehow, then it's can be worth the investment for sure. Also, last thing, check that they can do refunds. If someone's not doing refunds, that's messed up, because even Amazon does refunds, the biggest marketplace in the world. If they're not offering refunds for a product, that's generally pretty sketchy. Because if you're not happy with what you're buying, there should always be some type of dialogue, right, with between the product or the owner of the product and the customer, in terms of refunds and not being happy. So if they're not offering refunds, if people are saying, "Oh, I didn't get my refund," that's usually a scammy sign.
Awesome.
So yeah.
All right. So last big topic I wanted to cover is your YouTube channel. You've said that it's created a lot of opportunities for you actually. And I'd love to get some background on the onus, why you decided to start creating videos, what that experience has been like, and maybe what's next for the future of that.
Yeah. So I've always loved creating videos. I made videos on YouTube that are now private, but I was 9, 10 years old, recording my fish or like recording games I was playing. I remember playing like Call of Duty, recording it with my little dinky camera. I've always liked making videos, and I think I've watched more YouTube than cable TV. But growing up, I made a lot of videos about gaming, and then I kind of put a hiatus on it and want to get back into it. I just like, I wouldn't say I like being on camera, but I like talking about things. It's so weird. I like being able to share what's in my head, because what I find is that sometimes, you're trying to share something with your friends or your family and they just don't care, but someone cares online if you just told everyone. So I don't know. That's how I've always felt. But yeah, I started when it got into algo trading. I took it a little bit more serious because I had a lot of interest. So I started making videos of it, and obviously they did pretty well view wise. So I got some positive reinforcement learning. So I kept making more videos about it, and the goal was just to share my experience with it, show how it works, teach people. I have some playlists of there, how to code a trading bot on YouTube there, and also be transparent with my trades and how much I'm making. And then I got some really great opportunities. People reached out to me through my email that I would post in the description, and I got some, I guess you could say, freelance work. Where people wanted for me to build systems for them. And that was a business opportunity for me. Right. I think it's one of the best ways to start a business now is through these social media channels. I still think cold calling is good. And obviously being in person with someone is great, but it's opened, like, I never imagined it would do this well. And so many people were interested with it because I just view myself as a nerd, like talking about random stuff. Right. People like it. I'm like, what the heck is this? The world's weird, Mm-hmm. So it's cool finding people like you as well. We kind of share a lot of similar interests. And we never would have met, if I didn't start YouTube, if you didn't start YouTube. Right. So it's made my life a lot better, and I'm just going to keep chugging along with it. I love it.
I love that. And I think it's important to, when anyone's creating content, half of it, you are creating it for yourself, right? At least for me, when I teach something, that's when I clearly understand it. When I talk through it, whether it's a rubber duck for coding or anything like that, articulating it is so important. It can also be cathartic. It can be whatever it is. Mm-hmm. But, it's funny, most of the things that you talk about, if you're struggling or working through something, other people are probably facing the same thing. They also want to understand that. And there's a great sweet spot where you can talk about things and it's helpful to you, and other people can listen to them and it's helpful for them. And I think that anyone creating content, that's an important thing to understand, is that, start off when you're doing it, just make videos for yourself. And just as you said, the people that are interested in it will eventually gravitate towards you as well.
Yeah.
So I love what you're doing. We've obviously talked about collaborations in the future in some videos, and I'm really excited about those. I have a couple of things I've kicked down the road first, but I'm very excited for what the future holds, and I'm excited to see what you do with all of the things you're working in. We both have quite a few things that we have our hands in, and it's really exciting to see kind of outside of my domain a lot of the entrepreneurial stuff that you're involved in.
Thank you. I appreciate it. Yeah, it's been a whirlwind, but at the end of the day, YouTube has opened up a lot of opportunities. And even before I started YouTube, I was doing decently in terms of my business, but YouTube has just exploded it. And I love dipping my hands in multiple different things, not too far away where, it's causing me to be distracted, but enough that I can help other people in a different way, whether it's, building trading systems for people, automating stuff, educating people on how to do it, or, hopefully providing a return to my clients when I do open that fund one day. I like helping people in different ways, because everyone has sometimes like a little bit of a different problem, right? That you can't quite solve if you just did your business one way. But if you do it 2 or 3 ways, you split it off a little bit where it's close enough to your core business, but it just helps someone in a different way. I think you can really help more people at the end of the day and solve problems and do that sort of thing.
Well, that's a common thread I see in, I wouldn't say in every successful person or successful business, but in quite a few. You're doing similar things and you're getting as many miles as you can out of them. For example, I'm doing a podcast, I'm making videos, but I can take the podcast and put it on YouTube. I can cut up this podcast into clips and make another channel. I can have this part of these things be Twitter content. And, that one video, this interview, for example, is going a lot further than just being a one-off thing. It has kind of a life of its own, and it can create all these other opportunities. If you're building a trading bot, you can very easily record that and make it into a video. You can get all of this. I think in this case, it's scope from that one thing. And I would challenge everyone listening, think about how you can get scope out of the things that you're currently doing. Whether you're working on a data science project, well, how much more effort is that to make it into a web platform or just a web app so that it's useful to other people and it lives further. Those are the main questions I had. At the end, I always like to open it up to you to talk about any of the initiatives you have going on. You can talk about your business. You can talk about a video series, whatever that might be, or you can give some parting words of advice. But the floor is yours, Jake.
All right. I would just end this podcast with I'm working on a lot of cool stuff, and especially when it comes to building, basically my end goal, at least for 2021, is to build a massive marketplace of trading bots where you can view them, you can subscribe to them, you can see how much they're making, and actually use them for yourself. So that's the coolest thing I'm working on. And I really just push everyone to really push the boundaries on whatever you're creating. If you think it's going to be too hard, don't stop, keep going. Like usually if it's really hard, generally it's worth the investment. And I think this algorithm marketplace, like I know it's going to be really tough to do. I've already put, quite a bit of hours into it, but I know it's going to help a lot of people, and I enjoy doing it. Like it gives me purpose. Right. And it took me a long time to find that purpose, but now I found it and I'm not letting go. So that's all I got to say.
Awesome. Well, thank you so much again for coming in. I really enjoyed this. I think everyone, whether they're specifically interested in algo trading or not, is going to find this fascinating.